Today, I'm gonna be teaching my friend Michael how to trade options in the stock market. So at the end of this video, we're gonna check back in and we're gonna see if you ended up making money or blowing up your entire account. Scroll down to see what your position looks like. Now, Michael, tell the audience what you do for a living and why you want to learn how to trade.
Awesome. So I go to school for mechanical engineering and I would like to learn how to trade options so I'm able to kind of create some extra income off of the part-time work that I do and some of my own little side hustles that I pick up here and there on the side.
Okay, awesome. Well, what I wanna do, start off, I had you deposit $500 in your Robinhood account. I want you to choose a random stock.
Great.
And buy a random option contract based off of what you know, and you don't know anything, correct me if I'm wrong. You have some long-term investments, but you've never actually actively traded before.
Yeah, nothing short-term, only long.
Okay, so you got some long-term positions, but I want to essentially simulate what a beginner would do. So you're gonna enter this position, and at the end of this video, we're gonna check back in to see if you end up making or losing money.
Great.
Okay, is that fair?
Yeah.
All right, so do you have any companies in mind that you wanna trade?
Yeah, I was thinking about trading this company here, Zscaler.
Okay, ZS. It's up 4% on the day. I've never heard of it. So are you gonna go long or short? Do you think ZS is gonna go up or down?
Well, considering it's up 4%, I don't.
You don't know, that's the thing.
know,
So
yeah.
don't worry, we're gonna hop on inside my computer in a bit. I'm gonna actually teach you, educate you so you can know, but right now, just click on trade.
All right.
Now, the first thing when it comes to trading options is you have to choose an expiration date. So if you hit trade options, you're gonna be presented with a series of expiration dates.
Yep.
Okay? And
These ones up here?
yep, so August 23rd, 30th, September 6th, you actually have to choose a point at which your contracts will expire. So I'm not gonna tell you which one to buy, but I will say inherently some contracts are gonna be safer and some are gonna be riskier based off of the expiration date. So go for it. Choose a expiration date that you think would end up making you the most money.
Probably like August 30th.
All right, so now you're gonna be presented with the option of either buy a call or buy a put. Do you know what calls and puts are?
I have a brief idea of what call and put is. A call is kind of like buying long versus short selling, which is more like a put.
So if you want to buy a call,
Yeah.
or if you want to bet on the direction of that stock going up, you'd buy a call.
Yeah.
If you want to bet on the direction of that stock going down, you'd buy a put.
Yeah.
Perfect. So what direction are you betting on it going?
Well, I'm thinking it's probably gonna go down this afternoon a little bit.
So you're gonna buy a put. Okay. All right.
Yeah.
And next you're gonna be presented with the strike price. Okay. So on the left there, you can see you've got the 265 puts. You've got the 260 puts. Once you choose a strike price, so based off the strike price, some are gonna be riskier, some are gonna be safer. And I'll teach you later on, but I'm just, again, we're trying to simulate what most people will do, which is just literally guessing and having no idea. So just choose whichever one you think is gonna make you the most amount of profits.
I think this 255 right there is looking pretty solid.
So I want you to look at the price. Now these are the prices of the contracts. We've got the 255s, those cost $77.95. But because these are option contracts, they're essentially leveraged 100 to 1. So that's not $77.
That's like
$7,700.
Okay,
You've only got $500.
that's a lot of money. I don't have that much money.
You don't. So you couldn't buy those.
Okay, so I'd have to go with something 125 put at 51 cents a contract.
Okay.
Yeah.
You could buy a couple of those.
Probably could get like 3 or 4.
So click on the plus if that is your decision.
All right.
Now you're gonna go next.
Next, so press continue.
Yeah. How many do you want to buy?
I say let's just buy $500 worth.
Okay. All right. So you can choose the amount that would be equivalent to or as close to as that $500 in your account.
Cents.
You can click 4 and then you can see how much it would be, or you can just
Buy like 8, 408. That's pretty good.
okay. Yeah. All right. Now you can see your order type.
Yep, we got a limit.
Limit.
Order.
Do you know what a limit order is?
Yeah, you're kind of just putting in the amount you're ideally you want.
Yeah, exactly. I mean, a limit order is just you saying, hey, I'm willing to pay X amount for these contracts. No
just
more,
your
no
bid.
less. So you're bidding on that price, right? Whereas a market order, you're just saying, hey, I'll pay whatever. I just want to get in the position. Do you want to go in with a limit or a market order?
Probably, I don't know much about contracts, so I feel like
In a limit order, you might get filled or you might not get filled.
yeah,
like you were saying.
that's kind of what I was thinking. So it might be worth it to just risk it and do a market order on it.
It's up to you.
I'd say just run it.
Okay, all right. So if you're ready, you can swipe up and submit and send that through.
Review, continue, make order unavailable for this contract.
Market order. Huh, it won't let you place a market order.
What does that mean?
There's no volume on these contracts. I couldn't see your phone, but you know what that means?
No one's trading them.
No one's trading them. So guess what? If there's no one to sell the contracts to you, you can't buy them.
All right.
Okay, so this is a huge part of options trading. You can look at a set of contracts. It's harder on Robinhood, but I'll show you on my broker where you can see the open interest and the volume. Open interest, how many people are currently holding those contracts, how many open contracts are there in circulation, right? And then the volume is how many contracts have been exchanged between a buyer and a seller, or seller and a buyer, right? How many contracts have exchanged hands on that given day. So right now, I'm assuming there's like 0 volume, 0 open interest, because you can't even buy these.
Yeah.
What we're gonna have to do is we're either gonna have to find another stock, or you're gonna have to look at the other sets of contracts. But at this point, looking at all the other contracts, when you're scrolling down, I can see that more than likely there's gonna be no volume on any of those,
Okay.
because it seemed like they're all relatively similar. So do you have another stock you wanna buy? Citibank, right?
Yeah.
Are you gonna buy contracts on ticker symbol C? Is that the plan?
I think that's the plan.
Do you think C is going up or down?
I think it's going up.
Okay, so you're gonna wanna buy a call. And I'll tell you right now, if you go to the share price, the current share price, anything below, so any strike price below the current share price is gonna be considered in the money when it comes to calls. Anything above the current share price is gonna be considered out of the money.
So let's try that one.
Okay?
And then 562.
Looks like you could only buy one of those
Can
contracts.
only get one. That's all right.
Are you okay with that?
I'm fine with it. Are you cool with it?
It's up to
Fair
you.
enough. All right.
Limit or market order?
A limit order at like 57.
Obviously, if you want to place a limit order, you could see here the bid and the ask. So the bid is $275 a contract. The ask is $281 a contract.
So let's throw it right at like
In the middle,
277.
okay, kind of like around the mid. Okay,
Yeah.
277, and then swipe up and send that thing through if you're ready to place that order. And then we could see if you'll get filled. And it looks like you're filled right
Cool.
away.
Sweet.
So at the
All
end
right.
of this video, we're gonna check back in and we're gonna see if you ended up making money or blowing up your entire account.
All right.
Are you nervous?
A little bit. Let's go.
All right, now it's time for me to actually show you how to trade. Okay, I know you kind of just bought that last one based off of intuition. You really didn't know what you were doing.
Yeah.
So first things first, we've got my broker pulled up here. Now I am a swing trader, which means that or whatever I am buying, I'm holding over a series of days. Now, if I open a position, I'm typically holding that between 3 to 5 days.
Okay.
So day trading is different. Day trading is where you're buying and selling within the same day. Swing trading is where you're buying and selling over, obviously a day or multiple days.
Yep.
Swing trading allows for more time flexibility. I know with you, you're in school,
Yep.
and then when you're not in school, you're working to earn money on the side. And so with swing trading and with the way I go about swing trading is it only requires about 30 minutes of your time each day. That's after you've obviously put in the work and educated yourself. Now I will say today what we're gonna do is essentially I'm gonna give you a 30,000 foot view pertaining to my trading system, really half of my trading system, okay? And then I'm gonna get you inside of my mentorship group. I'm gonna give you access to all of my resources. I've created custom tools. I've been trading for the last 8 years. So over that time, I've been able to create tools and I have my own software and I'm gonna give you access to everything that has helped me find that consistency.
Okay.
But I really just wanna give you a 30,000 foot view in this video. So I'm swing trading, okay? Using this 4-hour time frame. That's what you're looking at right now. I'm trading off of a 4-hour time frame, looking back over the last 180 days. Okay, so this is what the chart is gonna look like. I know you were looking at the Robinhood chart.
Doesn't tell you anything.
Doesn't tell you anything. These are candlesticks, and like I said, each candlestick represents 4 hours. I've got 3 moving averages pulled up, okay? I've got the 180-day SMA, the 50-day SMA, and the 15-day EMA.
Okay.
So we've got 2 simple moving averages and 1 exponential moving average.
Okay.
These moving averages are what I like to call reference points, or I will utilize them as reference points when it comes to identifying whether there is a setup on a chart or not. Okay. So when I'm looking through charts, I'm looking at the bigger picture. I'm looking over the last 180 days. I'm looking to see where these moving averages, these lines are trading in correlation to the candles.
Yep.
Based off of that, I'm able to see if there is a setup there or not. And all the setups that I have, which 3 setups right now are the main ones that I'm trading. I've been obviously kind of rotating and changing the setups that I'm trading year to year based off of market conditions. Right now I'm trading 3. All the setups are gonna take place around an all-time high or an all-time low on a chart, okay? So you can see the low here and the high here. So when I'm doing any trading, I'm gonna be trading around an all-time high or an all-time low, okay? And then looking at the moving averages, I'm gonna see, well, based off of a couple different things, whether or not there's a setup. That kind of hopefully makes sense. I know we're speed running a bit. Now, how am I actually going about finding what stock I'm gonna trade? Well, I have a software, which I'm gonna pull up on this screen right here. As traders, we have to answer 4 questions. Number 1, what stock do we trade? Number 2, what direction do we bet on that stock going? Number 3, where are we right? Number 4, where are we wrong? So my software answers 2 out of those 4 questions. It gives me what stock to trade and essentially what direction to bet on it going, okay?
Okay.
So when I go through my software, what I'm gonna do is I'm gonna sit down at 3 o'clock at the end of the day. Between 3 to 4 p.m. Eastern Standard Time is when I do my trading. From about 3 to 3:30, okay? That 30 minutes that I referred to is my actual active trading, where I'm going into my software, I'm applying one of these filters.
Yep.
So this is my swing trading filter, and I'm gonna be presented with a list of stocks. Boom, 5 stocks, okay?
Okay.
Now, we're gonna work our way one by one through these stocks and pull up the charts. What I'm gonna be looking for and visually scanning for when I pull up these charts are one of those 3 setups that I referred to. We're gonna have entry criteria and trade management criteria. So we've got the ATL bounce, which stands for all-time low bounce. And I'm gonna have some of this info blurred. Obviously, you can see this, but we're gonna keep that just for mentorship group students only. Pullback play, that is my pullback play setup, okay? And lastly, we've got the ATH pullback, which is the all-time high pullback. So those are the 3 setups that I trade, and then the corresponding entry criteria and trade management. So after, obviously, I've gone into my software, I've applied my swing trading filter, I'm gonna start on the first number 1 stock, or you can sort in any order you'd like, LD, okay, or LQDA. Now, I'm gonna pull up my checklist. We're gonna be going over the ATL, or all-time low bounce, okay, in this video. This is one of my favorite setups. And maybe I'm saying favorite, but it also is gonna come down to the data based off of each setup. I'm gonna have higher or lower win rates. Some setups I will make more money, some I will make less money on. With this all-time low bounce, we're gonna first look at the entry criteria. Do you know what the trend or a trend of a stock is?
Yeah, you have your bullish and bearish trends.
Bullish and bearish, okay? So we are looking for a bearish trend.
Okay.
So I want you to tell me, is this a bearish or a bullish trend? And a rule of thumb is, you can see the 180-day SMA right here, this green line. If candlesticks are trading above the 180-day SMA, typically that is a bullish chart.
Yeah.
Bullish, right? Yeah. From bottom left to top right.
Yeah, because a bull charges, bears go and sleep.
There you go.
That's how I always remembered it.
That's great. So it looks like this chart was bullish off of that low at $6 up to that all-time high at 16.
Yeah.
We broke below the 180-day, and now we've been trading down.
Yeah, so it's a little bearish right now.
So the more immediate trend is bearish because we're moving to the downside. We're moving from, the top left of the screen to our bottom right. So entry criteria, we can check that off. Overall trend is bearish. Now, all-time low ATL just formed or previously formed. The all-time low was unfortunately not just formed. You can see it was formed way back here.
Yeah.
And it was previously formed, but when I say previously, what does that mean? Well, what we're gonna do is, you can see top left of my screen right here, we've got the average daily range and the 5-day projected movement. This is a tool that I built that's pre-installed into my Thinkorswim. I'll get you set up with this too. It's my ADR calculator, which is essentially gonna give us the average daily range based off of our hold period. I said I hold stocks between 3 to 5 days. That is why you see the 5-day projected move is pulled up.
Yep.
And that 5-day projected move is 14.44%. So how we're gonna determine right now if we are sitting at least close enough from that all-time low to take this trade, we are going to just use this tool, okay? This trend line tool, we're going to drag from where we're currently trading down to that all-time low. And you can see here, we are trading 47, almost 48% away from that all-time low.
Yeah.
Our 5-day projected move is about 15%, 14.
Yeah.
We're way off. So we would have had to have been trading within that 5-day projected move. So less than 14% away to actually look to take this trade. That all-time low would have had to have been sitting less than 14% away. But because it's sitting 50% away,
It's not worth it.
we can't take it. So right away, we can't check off that box. We're not gonna take this trade. Now, I wanna say, when it comes to these orders that come through on my software, you can see we've got all calls today. Okay, call volume 5, market sentiment is bullish. Well, when I'm looking at a chart, obviously we just looked at this chart and we just looked for this all-time low bounce. There's 2 more setups that you'll learn, and we would look at this chart and see if any of these other 2 setups, right,
Yep.
are presented. I can tell you they're not right now. Secondly, kind of to wrap that note up, we're gonna move on to the next chart, but my bias behind the chart from a technical perspective has to align with the order behind my software. If I went through the checklist and I checked everything off and I'm like, great, I'm gonna, trade that ATL bounce. If that had been the case, which that's a bearish setup where I'm looking to buy puts to bet on the direction of that stock going down.
Yep.
And say the order behind my software was a call, then I'm not gonna be able to take that trade. So if it was a put, I would, but because my technical bias is in opposition with the software bias, I'm not gonna take that trade.
Okay.
Got it? Next one, we can go, actually we'll work our way down. NEM. Now, knowing the all-time low bounce, we are looking to find a chart that's trading at an all-time low. Is this trading at an all-time low? No, it's not. So right away, again, we'll go through the next 2 setups. If neither of them are found or identified, and if we can't check off all of our boxes, we're not even gonna look into the stock further, okay? We're not even gonna look into taking this trade further and looking at creating our trade plan. So CZR is next. One thing I like to look for is a clean and clear chart. I like to say the cleaner and the clearer the chart, the better, where the overall trend is very clear and where moving averages are respected. So when it comes to managing our trade and using these moving averages as reference points, we want to see that they are what I call respected. That means that candles are not trading straight on top of a moving average, or at least they might have slightly touched that moving average, broken above, but they do pull back below or they do bounce off of it. If you see that moving averages like the 50-day SMA right here is essentially just being traded through, candles are not respecting that level. We want to see where these candles are clearly trading above or below a moving average. This is a very, I would say, not clean, not clear, and very choppy chart. So I will tell you, based off of just the way this chart looks, it's going to be very hard to actually manage this trade, because you can see
There's
here
a lot of kind of
choppy price movement. We've got none of these moving averages. None of them are respected. The 15-day isn't respected. We'd like to see that this 50-day has been respected over the last 50 days and that the 180-day has been respected over the last 180 days. Or if the 180-day hasn't been respected over the last 180 days, that's fine, as long as it's been respected within the shift of trend. So the second 2 questions we have to answer as a trader, where are we right and where are we wrong? That is going to be answered by 9 out of 10 times when it comes to these 3 setups, where these moving averages are trading in correlation to the candlesticks, and if they're respected or not. We're normally going to use our stop loss and take profit, where we're right, where we're wrong. That is going to be set based off of a moving average, okay? So again, the software is giving us what stock to trade, what direction to bet on it going, as long as our technical bias from a charting perspective aligns with that, great. The second two questions, where are we right, where are we wrong? That's going to come down to setting our stop loss and take profit based off of one of these moving averages. Now, when it comes to our checklist, you can see we want to make sure that the 180-day SMA is currently respected, obviously within the immediate trend, that the 50-day SMA is currently respected, and that the 15-day EMA is currently respected. Now, ticker symbol GM, look at very clear chart, very clear trend here. Prior to breaking below the 180-day SMA, you can see the low at 27 up to the high at 53. But very clear trend here, pullbacks to the 180-day. You can see we've ended up validating that level had been very, very strong, right? We had obviously clearly seen this 180-day SMA was respected. Now we've broken below. We haven't even had a chance to test it again. We're not trading near an all-time low. I know we're trading way off of it. We're trading, at least I can see based off my 5-day projected move, way more than 5% off of that all-time low. We can draw down to that all-time low, and we're sitting about 35%. So we're way far away from that all-time low. We wouldn't actually trade this all-time low bounce setup. Now, it's 12:24. What I typically do, like I said, is I sit down at 3 and I spend about 20 minutes going through my software, pulling up the charts and seeing if there's a setup or not. There will be more trades that come in more than likely throughout the next couple hours, and then maybe there will be a setup there. I don't trade every day. Typically, maybe once or twice a week, I'll actually find a setup. So I know we just went through all of these stocks and we didn't find a setup, but do you now understand the first half of my, I guess, trading system? And yeah, okay.
I understand it.
So this is like how I actually go about finding a stock to trade, like I said, looking at the chart and deciding, okay, is there a trade there or not? And then what the second half entails, well, I think we're gonna have to save that for a part 2.
All right. Yeah.
I want to take some time to answer your questions, and there's a couple smaller things I want to go over.
Great. I think this is all like really interesting. I haven't really like heard about a lot of these terms like respecting moving averages so much, and it's been interesting to see kind of how you've got it set up and how you're having your moving averages scaled so that you're able to kind of see where it's going. I think that's really, really informative information.
Awesome. I know that's like a lot to throw at you. I want to get you inside my mentorship group.
Okay.
You can start working your way through the video lessons, okay? I want to check in on your trade. I want to see if you ended up making or losing money. Are you ready to see?
Yeah, I'm ready.
All right, let's look at your phone and see. Scroll down to see what your position looks like.
Made $16.
You're up 6%.
Not bad.
That's pretty good. That's awesome.
Sweet.
But that's some beginner's luck because you had no idea what you were doing.
Fair enough. Yeah, I was just went for it.
What did you think?
It's definitely a little like kind of spooky going in when you don't know.
Spooky, yeah.
Yeah.
Are you gonna sell that and lock in your $16 beginner's luck?
It's probably not a bad idea.
Or are you gonna keep holding it?
I think we could probably hold it for a little longer.
I think for the purpose of this video, it's up to you, but we should probably lock that profit in. I want you to go through, like I said, the mentorship group. I will put a link in the description below if you guys are interested in learning more, okay, in following along and seeing how I'm trading and having access to everything that you will. Okay, you guys can learn alongside Michael. Let's just lock this in.
All right. Yeah.
I think that was very lucky that you ended up making money. What I see is a lot of the time, it's quite the opposite. But this is also something that a lot of beginners deal with, which is this beginner's luck. It seems very easy to make money, and then very quickly you will realize that it is not.
Yeah.
All right, you're locking in your profit, and it's sold. How do you feel? Do you feel more educated?
I definitely feel a little bit more educated after talking about kind of your strategies and seeing how you're doing your analysis.
I'm excited for you to learn. The link will be in the description below. If you guys did enjoy, if you want to see part 2, subscribe, stay tuned. We'll see you in the next one. Thanks for watching.